Hey everyone, welcome back to Corporate Decoder. Today CGC I2 just filed an 8K announcing a merger with InoBat AS, and I am seeing a familiar SPAC pattern. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is essentially an investor presentation for a proposed business combination, and it is packed with forward-looking statements and risk factors that we need to unpack. So what we have here is a Form 8K filing from Cartesian Growth Corporation 2. This is a special purpose acquisition company, or SPAC, and they are announcing a deal to combine with a Norwegian battery maker called InoBat. As essentially, this is how InoBat plans to become a publicly traded company without going through the traditional IPO process. The big news here is that they released an investor presentation on the 14th of August 2026 detailing this proposed business combination. Cartesian Growth Corporation 2, or CGC as they call themselves, is a company that was formed for the purpose of acquiring other companies. They raised money from investors in an initial public offering, and now they are using that money to buy InoBat. Think of it like a blank check company looking for a target. They are also flagging themselves as an emerging growth company, which means they can use some relaxed reporting rules. The main point of this filing is item 7.01, which is about regulation FD disclosure. This means they are making information public that could be important to investors. In this case, it is the investor presentation about the business combination. They are using this presentation to talk to shareholders, potential investors, and analysts about the deal. This presentation is the heart of the filing. It is attached as Exhibit 99.1, and it is where all the juicy details about InoBat and the proposed merger are laid out. We're going to dive into what that presentation likely contains, even though we can't see the actual presentation file itself within this text. It is where they explain why this merger makes sense and what the future could look like for the combined company. Now, this section is crucial because it is telling you what to expect next. CGC plans to file a registration statement on Form F-4 with the CSE. This is a big document that includes all the official details about the merger, including proxy statements for shareholders to vote on. They'll be sending this out to both CGC and InoBat shareholders. The key takeaway here is that shareholders will have the chance to vote on this deal. They are also directing everyone to the CC's website, www.cc.gov, to find these documents when they become available. This part is a standard but very important section in any filing discussing future plans. It is the forward-looking statements section. Companies use this to protect themselves legally. They're essentially saying, look, we're making predictions about the future, but these are based on our current expectations and assumptions. The actual results could be very different because many things are outside of our control. They list a whole bunch of potential risks and uncertainties, from regulatory approvals to market conditions and competition. This is the meat of the risk section. It highlights that the deal might not happen or it might not turn out as planned. Things like not getting regulatory approval or not being able to secure needed financing are major hurdles. They also mention shareholder approval and redemptions. When shareholders in a SPAC like CGC get nervous about a deal, they can choose to get their initial investment back instead of participating in the combined company. This is called redemption, and if too many shareholders redeem, it can leave the combined company with less cash than expected, which is a significant risk. This is very similar to what we saw with companies like Bed Bath & Beyond, where a lack of financing and market challenges led to significant operational difficulties. A high redemption rate can be a death knell for a SPAC merger. This is where we get into the nitty-gritty of InoBat's specific business. They are in the battery technology space, which is super complex and involves a lot of uncertainty. They're talking about risks related to developing their technology, controlling costs, predicting supply and demand for their batteries, and hitting their production targets. It is also clearly stated that InoBat is an early stage company with a history of financial losses. This is a critical point. Many SPACs merge with companies that are not yet profitable, and InoBat is no exception. Their success hinges on executing a business plan that hasn't been fully tested in the market yet. The reliance on intellectual property and the potential for trade control issues also add layers of risk. This is a familiar story to companies like Tupperware or Rite Aid, which have faced significant challenges in scaling up operations and managing costs in competitive markets. This section identifies who might be influencing shareholders to vote for the deal. It includes the directors and executive officers of both CGC and InoBat. They're basically saying that these key people might have a vested interest in the merger going through, and that information about their interests will be detailed in the upcoming proxy statement. It is standard procedure to disclose these relationships to ensure transparency for shareholders. This is a legal disclaimer. They are making it clear that this 8K filing is just an announcement and not the full picture. The more detailed information will be in the registration statement and proxy materials they will file later. So if you are an investor, you absolutely need to read those more comprehensive documents before making any decisions. This section tells us what exhibits are being filed along with this report. The most important exhibit here is the investor presentation dated August 2026. This is the document that presumably contains the financial projections and strategic details for InoBat and the combined company. It is the source of truth for understanding the business case behind this merger, even though we only see the reference to it here. And finally, the signature. This is where the authorized representative of Cartesian Growth Corporation 2, in this case Peter Yu, the Chief Executive Officer, signs off on the report confirming that the information provided is accurate to the best of his knowledge. It is dated the 14th of August 2026. The same date the investor presentation was made available. So what is the story here? We have a SPAC, Cartesian Growth Corporation 2, that is looking to merge with InoBat as a battery technology company. The filing itself is primarily an announcement of an investor presentation, which is the real document to scrutinize for financial details and strategic plans. The presentation likely dives into InoBat's technology, market opportunity, and its path to profitability. However, the risks are substantial. InoBat is an early-stage company with a history of losses, and the battery technology sector is inherently volatile. Like many SPAC mergers we've seen, especially with companies aiming for growth in emerging industries, there is a significant chance of high shareholder redemptions impacting the deal's financing. This, combined with the inherent challenges of scaling a complex technology business, presents a considerable risk. The comparable I am thinking of is companies like Apple, which also aimed for rapid growth in a new sector, but faced significant hurdles in execution and market acceptance, ultimately leading to substantial stock declines. A $1,000 investment in a similar SPAC post merger could easily see a 70 to 90% drawdown in the following year if the underlying business doesn't rapidly prove its viability. My biggest concern is the execution risk for InoBat and the potential for significant cash burn before they can become profitable. I'll be looking closely at the actual investor presentation for concrete financial data and realistic timelines for profitability. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.